Let's get some perspective now from the chief economist of the OECD, Laurence Boone. Thanks very much for being with us, as always. Just give us your general takeaway on the economic landscape that's playing out this year.
Okay, so we've upgraded our projections for this year and next, as you mentioned, to 5.6% for the world this year, on the back of two main factors. The first one is the health situation, even if we don't feel like it every day, is improving, and vaccines are being rolled out. And the second one is the massive US fiscal stimulus, which will not only benefit the US, but will also lift demand growth throughout the world. We estimate that this stimulus will actually lift global growth by a full percentage point. And for Canada and Mexico, it will be a little less than that, but still very significant.
Where is some of that economic lift going to come from? For example, it makes sense if there's a lot of money coming into the U.S. economy, as their neighbor Canada should benefit. Is that going to be in the form of businesses just getting more business? Is it the idea that there just could be more money in the hands of American consumers to buy things that are coming from Canada? What are some of the trends you're going to be watching for? You mentioned the wild card, the vaccines. I imagine that's a big factor too.
Yeah, so that's a really good question. In fact, it's we tend to forget, but it's not normal to have some activities which are being shut down. It's not normal to have the border between Canada and the US being closed. But to reopen those, policymakers need to vaccinate, right? Because that's how we're going to walk around freely. So the US has this unique combination of very fast vaccination and very significant fiscal stimulus. That means that not only activities, shops can reopen, they can start traveling, going out to dine, to work normally. And so that demand, that extra demand, which will be generated also because their income has been preserved, will obviously mean higher demand for Canadian product. Next step would be for Canada to accelerate vaccination and for the borders to be able to reopen.
What's your view on what inflation will do on the back of this stimulus and this growth? That seems to be the big wild card here.
So we are seeing some tension on some commodity prices, for example, oil, as you know. There are also some tension on some specific goods where, the supply chain might not be working as it works normally in the absence of restrictions to mobility, like shipping or semiconductors. And in those instances, we run the risk of seeing higher inflation. It may be the same in some sectors as the economy reopens. But when we take a broader view, there's a lot of slack in the labor market. There's a lot of unutilized production capacity. And that obviously will take some time to resolve. It will take some time for unemployment to come down to pre-pandemic level. And during that time, we think that this inflation pressure will be transitory and will not last for long.
And you mentioned the slack in the labor force, and that seems to be what central banks, particularly in the U.S., are more focused on versus the risks that come from inflation. When you say it may take some time, how long do you estimate we're going to be dealing with the scars that COVID-19 has left on the labor market?
So I think this is a good question because this crisis is like no other. In the financial crisis, it took, in the wake of the financial crisis, about 10 years, an entire decade, for unemployment to get back to pre-crisis level. In this crisis, we think things might be a little different because policy action by governments has been massive. Incomes of households has been preserved to a large extent. The firm's balance sheet has been largely preserved as well. So it might take less. But having said that, policymakers need to do a lot more to help most vulnerable people, like the young people, for example, to get back quicker on the labor market than what happened in the last financial crisis.
Laurence, based on everything you're saying, I wonder if you have an opinion on this strong message that has come from the bond market on the idea of when interest rates start to rise again. Because we have obviously heard a lot of language from central bankers on what they would like to see to move down that path. But obviously, in the world of stock markets, there's been a lot of reaction these last few weeks based on a very strong opinion that rates are going to have to rise sooner versus later.
So, as an economist, I think it's normal that we are seeing interest rates rising a little because financial markets are repricing the growth prospect and the inflation outcome. And let me remind you that we have complained for years about too low inflation rate and too low growth rate. Now, as this expectation get higher, then obviously the bond market is repricing that in. We're more concerned about, overreaction of financial markets or outflows from emerging market out towards the US, for example, like what happened in March 2020. But overall, central banks have the means and have shown in the past that they know how to address volatility or this type of outflows.
And then I guess just to come back to the Canadian story, just to be clear to our audience, you highlighted that combination of aggressive vaccine rollout in the U.S. and this fresh stimulus, which will indirectly help Canada. Do you think if Canada was further along in our vaccination process, that would give you more confidence in your economic forecast for Canada? Because I think a lot of Canadians have felt as if, especially versus the United States, that our vaccine rollout has indeed been slower.
So I think we need to get to, if we're at war with the virus, we need to get on the war footing to address the virus. And that means producing more vaccine for those countries where there's a manufacturing capacity of filling and finishing the vaccine production, bringing the vaccine closer to people for distribution. This needs to be done. We need to distribute much more widely as well. It's a logistic issue. It has to go faster, right? Because when these vaccines reach out to people, then shops will be able to open. People will be able to travel from one province to the other. People will be able to resume work more normally. If vaccination takes a long time to materialize, even with a very significant fiscal support that governments have provided, the money gets saved. It doesn't fuel the economy. And obviously that is not a sustainable situation. So with this outlook, really what we're saying is, put the foot on the accelerator for vaccination so that the money can start flowing again and production increase and jobs resume. I think that's super important.
Outside of the vaccines, it sounds like that's the biggest risk to your outlook is the rollout there. What would come in as kind of the second biggest risk to your outlook? If it's not inflation, could it potentially be a policy mistake, either by central banks or on the fiscal side?
So what we're really worrying at the moment is actually divergences across countries, because that is a big risk of possible, transfer of capital flows, divergences, some countries not catching up, poverty rising, inequality rising. And we've seen prior to the pandemic that, this type of social movements are usually, it may be destabilizing for economic policies on top of, affecting people's well-being. So the four risks we look at in this outlook, they're effectively too slow vaccination. Then there's the inflation and financial market we discussed, but also the fact that, poverty, inequality are diverging, and that's worrying us.
All right, thank you very much. Laurence Boone joining us, the chief economist of the OECD, with her outlook and view there.